I think it's a great solution for investors who want to get exposure to the metal, but not necessarily have to pay the high premiums. And what I did back in 2020, I think a lot of you guys probably saw that silver went down to about $11 or $12. But the downside about that is you saw premiums spike, and you couldn't even get an ounce of silver for anywhere near $11 or $12. So what I did is I bought silver on OneGold to say, okay, I'm going to at least have an exposure to silver. And then when premiums return back to normal, and who knows when that's going to be, time will tell with all these COVID restrictions. Maybe it's in 6 months, maybe it's a year, maybe it's 2 years. I intend on using OneGold's redemption option and taking this silver position and essentially redeeming it out for physical silver, but at much lower premiums than what we're seeing today.
Hey everybody, this is Rob Keens with GoldSilverPros.com. I'm joined by a first-time guest today to talk about the gold market. It is one Patrick Yip, who is the Business Development Director for APMEX and OneGold, and you'll know those names because they're precious metals dealers here in the United States, and probably one of your favorite ones that you probably purchased with before. Patrick, how are you doing today?
Good. Thanks for having me on, Rob.
Yeah, happy to have you on. I wanted to bring you on because, first of all, you guys are one of the biggest dealers in the United States, but not the biggest one, so you really have insight as to what's going on in the physical market, and we want to talk about that. But also a little bit about your background as well to introduce you to the audience. I think you have a lot of information, a lot of understanding about the gold market over time, and that's always valuable to our audience as well. So first question, how are sales and how are things going at APMEX? Is it a busy time of year for you guys? What are you seeing on the bullion front?
Yeah, so first of all, demand has been crazy. It's been crazy since COVID times in 2020. So we're seeing sales at multiples of what we've previously seen before COVID. Like I said, lots of demand, several large customers placing large orders too. So in the beginning of this year, we're seeing a lot of existing customers place six-figure orders, a lot of new customers as well. So a lot of demand on the customer side. Going on to the mints, we're seeing it's actually interesting. So obviously with COVID, a lot of mints are running limited shifts. So if you were a mint that produced multiple sizes of different products, let's say you produce a 1 ounce, a half ounce, quarter ounce, and a 10th ounce, what they're focusing on is only producing the top product. So they're producing the 1 ounce sizes. And then the other sizes almost just are not being produced at all. So they're seeing limited production capacity. And in addition, with a high demand on the retail side, they're seeing higher margins too, which unfortunately is not the best case for the retail investors. So the mints are saying, hey, we're seeing high demand, we're moving all our products. There's no incentive for us to cut margins, which essentially pushes premiums up for dealers like APMEX, which then means we have to charge higher premiums to retail customers.
Yeah, a lot of it has to do with the wholesale market and the supply-demand dynamics. We track COMEX all the time, and it seems as though there's been a run on silver on the COMEX, at least in the available stocks are registered. So it seems like supply may be getting a little bit tight. Patrick, tell us a little bit about your background. Why are you in gold and why are you working for APMEX and OneGold?
Yeah, so it all started back in 2008. I was just the normal investor, heavily invested in stocks. I saw my 401k get chopped in half, and I said, okay, well, what's going on here? I think a lot of you guys probably have similar experiences with that. So I said, well, there's something that's a little odd. That how could my financial planner not see this? So it got me looking into Austrian economics. I started looking into precious metals. I was actually a customer of APMEX before I joined the company. So I was a customer back in 2010 of APMEX. I purchased precious metals prior to that. But it just got me into it. Just a little bit about so I've been with APMEX since 2011, been there for over 11 years. I've held different roles in APMEX in merchandising, sales, project management, marketplaces, and business development. And then most recently, I began running the company's fastest growing platform, which is OneGold, which is a company that allows users to buy, sell, and trade vaulted positions of precious metals.
So tell us a little bit about OneGold, why that product. If APMEX is a big physical bullion dealer, why did you start a solution for people to be able to store the precious metals? Was there a demand from your consumers?
Yeah, so APMEX is one of the largest physical retailers of precious metals. We've been in business for 20 years, over $15 billion in lifetime sales, over 2 million customers, and basically 25,000 products available in stock. So we're one of the largest bullion dealers in the U.S. And then back in 2018, we partnered up with Sprott. A lot of you guys who know who Sprott is, one of the largest alternative asset managers. And we wanted to come up with a new and modern way to buy precious metals. Just for people in certain circumstances, some people might want a vaulted solution. I look at it, and I'm a strong believer in physical. I believe everyone should own physical gold. But for example, right now, I think premiums are a little high for me. For example, silver eagles are trading for about $10 over spot, which is about a 40% premium with $24 silver. So I look at it, since OneGold is able to offer you basically ownership in a larger bar, so a 400-ounce gold bar or a 1,000-ounce silver bar, we could essentially offer gold and silver for 1 to 2% over spot on silver, and then 80 basis points over spot, or 0.8% over for gold. So I think it's a great solution for investors who want to get exposure to the metal, but not necessarily have to pay the high premiums. And what I did back in 2020, I think a lot of you guys probably saw that silver went down to about $11 or $12. But the downside about that is you saw premiums spike, and you couldn't even get an ounce of silver for anywhere near $11 or $12. So what I did is I bought silver on OneGold to say, okay, I'm going to at least have an exposure to silver, and then when premiums return back to normal, and who knows when that's going to be, time will tell with all these COVID restrictions. Maybe it's in 6 months, maybe it's a year, maybe it's 2 years. I intend on using OneGold's redemption option and taking this silver position and essentially redeeming it out for physical silver, but at much lower premiums than what we're seeing today.
Yeah, that's a neat way to do it. So you guys do allow people to redeem and get their physical. Can you describe how that process works?
Yeah, so you could buy different products, gold, silver, and platinum on OneGold, and what it is, it's essentially like a swap. So you could redeem it for any of the physical products available at APMEX.com. So as I mentioned, we have about 25,000 products. Obviously, you would need to pay the retail premium for that. So let's say I got a 1,000-ounce position in silver. It's essentially like I own like a 1,000-ounce silver bar in whatever vault. However, if I want to convert that to silver eagles, obviously the silver eagles have a premium over the 1,000-ounce silver bar. So I would basically need to pay the retail premium at that time, which, like I said, is currently high, but I expect it to return back to normal sometime in the future.
So where do you guys get your gold and silver for that supports the OneGold product? Is it the same stocks and stores that you get through APMEX, or do you buy it through like the futures market, or how do you source your metal?
We have a large, basically a large dealer network around the world. So we source through a lot of these big wholesalers, large dealers that have a lot of the bars. It's actually interesting when you look back at 2020, during that big drop in silver, we started selling silver and gold on OneGold. And it's important to note that we only sell metal that we currently have available. So if we have X number of ounces, we only make X number of ounces available. So there was a time when we wanted to source more silver, and then we called all our whole networks all around the world, and we said, hey, we want more silver. And they said, hey, there is none available right now, which is kind of interesting because we don't directly buy off the COMEX, but we compete with the COMEX for that available inventory. So the COMEX would store 1,000-ounce silver bars, and we would source 1,000-ounce silver bars as well too. So there was a time that was actually interesting in 2020 where the metal got extremely tight.
I bet it was. So you're, I guess, a gold bug, and you work for a gold company. You were talking to me before the interview about gold over time. What do you have perspective on gold over time? Have you done the research on that, and why is gold important to you?
Yeah, personally, I am extremely bullish on gold. Obviously, no one knows where the price of gold is going to go in the future, but two big reasons I'm bullish. So right now, you look at it, and we're in a high inflationary cycle. Just last year, inflation was 1.4% in January. Right now, the latest stat is running at 7.5%. In addition, you hear the Fed's talking about raising interest rates. So if I look back at history, looking at how gold typically performs during inflationary and rising interest rate cycles, you look at the 1960s to 1974, gold went up 5x from $35 to $200. In 1976 to 1980, it went up 8x from $100 to $850. So I think that this current cycle is extremely bullish for precious metals. That's one reason. Another reason, too, is I think everything's cyclical. I'm not necessarily a perma bull on gold or stocks or whatever. I think a lot of things run in cycles. And I think that the stock cycle may be ending. And just looking at the most recent trends, so you look at 2000 to 2011, people refer to that as a lost decade for stocks. Basically, stocks started at 1450 in 2000, went down to 1250 in 2011. So over 11 years, it lost 14%. So basically, you didn't get anything in stocks. On the other hand, if you invested in gold in 2000, you started at 250 and ended 2011 at $1,900. So it's a 7x gain. And then fast forward to 2011, what you saw is the reverse. So stocks went up 4x from 1250 to 4800. So huge gains in stocks. You look at what gold did. So obviously it started 2011 at 1900, went down to as low as 1050, and now it's back at 1900. So it's almost like the lost decade for gold. You almost hear that a lot of times people say we're in the longest U.S. expansion in history. I think that expansion was actually broken in 2020 with a decline in March, but it looks like it kind of continued on. But going forward, I wouldn't be surprised to see that the stock cycle's ending and we're switching back to a gold cycle. So if you look at it, gold made its most recent lows in 2015 at 1050. I wouldn't be surprised to see multiples of this level. I mean, whether it's 5x in the 1960s, 8x in the 1970s, or even 7x in the 2000s, I would not be surprised to see multiples of the 1050 level. In fact, I was actually listening to an interview last week with 𝙂𝙊𝙇𝙀𝙀, and he commented that he would not be surprised if he saw $4,000, $5,000, or $6,000 gold.
Yeah, that wouldn't surprise me either. In fact, if you look at the amount of money printed, not only by the Fed, but by China and by all the central banks, you could easily get to 10,000 gold or even more. You know, that's a perfect case scenario. I don't think the way that they're going to recapitalize the banking system is going to involve necessarily $20,000 gold, but it does speak to the power of gold in the banking system. Of course, the Basel III regulations, you know, officially recognizing it as a high quality liquid asset on the bank balance sheets. I think that does signal that gold is going to be important in the financial system moving forward. As of right now, we're recording this on the 23rd of February. Gold's sitting at about 1908 and silver sitting at 24.45. Is it important, Patrick, that we've gotten back to the previous all-time high in gold? It's not the high that we had in 2020 of like 2060 or 2065, whatever it got to, but it is an important milestone. It's taken a while, about 18 months for it to get back to this level. Is that a breakout to you, or what does that signify to you?
Yeah, I'm personally very bullish on gold. I think a lot of retail investors are seeing it too as well. I think inflation is everywhere. Everywhere you look, it seems like that's the headlines right now. Just a couple interesting things about inflation too is you currently hear the CPI saying that inflation's 7.5%. So I pulled up some commodity charts to say, like, hey, you know, is that actually true? A lot of times people say, hey, the CPI is way understated. So I'm looking at year-over-year returns on some of these commodities, which is important to everyday life. So oats are up 83% year-over-year. Coffee's up 79%. Nat gas is up 63%. Crude oil up 52%. Cotton up 30%, and the list goes on. So I think right now it's like the times have changed. It's certainly a different environment this year than it has been in the past couple of years. It's also interesting to note, so looking back in the 1960s, it took the Fed 9 years to resolve inflation. And in the 1970s, took 5 years to resolve inflation. This is not just a one-time, hey, it's going to happen for a couple months and then it's going to go away. And then I did some quick math too. It's like, so if you look at those, the 9 years and the 5 years, so if you look at 7.5% inflation, that's going to erode 32% of your wealth in 5 years if you just have kept it in U.S. dollars. And then over 10 years, it's going to erode 54% of your wealth. And that's just at 7.5% inflation. We hit 13, 14% inflation back in the 80s. So who knows if it's going to go higher or not, but just something that I think investors need to be mindful of is this is not just likely to be a short-term thing, and you need to protect yourself against inflation.
I agree with that. And we keep getting these high producer price index numbers. One came out within the last week. It was almost double digits. So the producers are paying almost double digit inflation. That eventually has to come down to the consumers. They can't absorb all of that forever. So I think I've called in the first half of this year, I think we'll hit the double digit on the CPI number. And if the Fed, does go the interest rate hiking cycle to try to reduce the effect of all liquidity in the system, because it's the money supply, which eventually causes inflation in prices. I do think that that's going to be negative for the bond market and things. And I do think people are going to rotate out of stocks and bonds, into the gold. And something I've said on our program this week, when I chart the major stock indices, the NASDAQ, the S&P, and the Dow, they're open wedges to the downside, which is not good. It doesn't look good for the stock market. It's been on a 12-year tear since the Lehman crisis, and now they're all open wedge down. You've got pressure on bond rates. And I don't know that there's much place you would want to go other than gold. And some people would speculate Bitcoin, but that's a very young asset class, which I think is yet to be proven. So I do think that there's still going to be a lot of rotation into gold and even silver as we go forward. I did have one last question for you, Patrick. You guys with OneGold seem to have a wonderful product. I've talked about them when I talked about gold storage options on our video on the channel. Tell us why they should consider OneGold over some of the other options. What are some advantages you guys have, in the market that the people do not?
Yeah, so I think one of the most important things to consider when looking at a vaulted solution is who is it backed by? Obviously, APMEX has been in business for years. Sprott is a very recognizable name. I think you need to consider a lot of that stuff is this going to be a fly-by-night company, or is this company around for years, and are they likely to back the product? I think that is probably the most important thing to consider is who owns the company, who's it backed by. When you do say, hey, I do feel comfortable with that company, you want to make sure that it's allocated and segregated. You don't want one of these things with like the Perth Mint thing where there's rumors about them commingling some of the metal and who knows the whole story. There's a whole, I don't know the specifics, but there was a lot of backlash over there at the Perth. So you want to make sure it's allocated and segregated. You want to make sure that you have title to it. And then lastly, you want to make sure that the metal is insured and audited. Actually, with OneGold, it's insured by Lloyd's of London, and it's audited by a top 5 accounting firm. We actually post our inventory reports online, too, so that you could see it. So you could feel certain that, hey, your metal is, in fact, there.
Would OneGold or APMEX ever take the position of over-leveraging their customer accounts to gold and silver that they have in storage?
We do not. And actually, like I mentioned before, in 2020, when metal was not available on the silver side, we actually had to pause sales. Not exactly what we wanted to do, but we said, hey, we can't sell an unallocated position. Our reputation is worth way more than selling a couple more ounces to customers. So we actually paused the platform and we said, hey, we can't sell anything until more silver and gold are available.
Yeah, it's great that you did that. I know Perth definitely didn't do that. Daniel and I went over Perth with a fine-tooth comb on their annual statements, and I think we figured out that they, were not only selling forward some of their gold and silver that they hadn't received yet, but in addition, they were bailing out some sort of counterparty, as their CEO basically admitted to on Gitco. So we're always, of course, looking for companies that look at their customers first, not necessarily big counterparties in the market. And I appreciate being an APMEX customer over the years. I don't know how much gold and silver I bought from you guys. It may be 6 digits in the last 12 years from APMEX. But since you guys are just north of where I'm at in Oklahoma City, I'm in Dallas-Fort Worth, I get prompt service and delivery. And always been a big fan of APMEX, so happy to have you on. We'll have you on the program again, Patrick, as well, to give us some reports on what's going on in the gold and silver market and talk a little bit more about OneGold. Thank you for joining us today on the program. We appreciate having you.
Great. Thanks, Rob.
Hey, everybody, this is Robert. Thank you so much for watching that video content. I have a couple of quick announcements I'd like to share with you as we head out of this video. Also wanted to remind you, you can find us on goldsilverpros.com. We have a free newsletter. If you click here and enter your email address, we'll send that out every Monday to you, as well as we have special precious metals deals with leading bullion dealers here in the United States. If you click that button, you can go here and click on either Miles Franklin or ARC Silver and get the best deals in the business. Once again, thank you guys so much for joining us on the channel. Until next time, this has been Gold Silver Pros.